In this episode, I talk about reverse mortgages. Welcome everyone to this episode. I'm Jason Gelios, Michigan Realtor. Really appreciate you guys tuning in to this episode. Had a great question about what is a reverse mortgage, and I don't believe this is the first time I've featured this question on this show. However, I wanted to kind of share with you an updated definition of what a reverse mortgage is, and we're going to dive into some of the pros and cons. Now, before we get into this episode, if you're not following me on social media, please do so. All those links are in the description below. And always visit my website. It's allabouttherealestate.com. Put your information in the pop-up and you'll be on the email list to receive this show once a week so you don't miss out. Now, put together some items here in terms of what a reverse mortgage is. And so I want to share with you the definition. Now, in a sense, a reverse mortgage is a loan. It's when a homeowner who is 62 years old or older and has considerable home equity, they can borrow against the value of their home, and they can receive the funds as a lump sum, fixed monthly payment, hence the name reverse mortgage, where the bank pays each month. And you can also have a line of credit where it's available and you just take what you need. Kind of like a home equity line, but not exactly. So unlike a regular mortgage, the type used to purchase a home, a reverse mortgage doesn't require the homeowner to make any loan payments. So let's say you have a home, you're 62 years or older, and you want money, you want cash flow each month. Let's say you choose the monthly option, which most people choose that. The majority of people who do a reverse mortgage actually vie for the monthly payment. And so you get a check, let's say it's, $1,000 a month, right? That comes to you and you can use that for living expenses, pretty much whatever you like. You don't have to say what it's for. It's just you get that, and then that goes against your equity. Now, hence the word equity. You got to have equity in the home. Now, the entire loan balance, how much you take out, becomes due and payable when the borrower, right, or the homeowner, right, dies. Kind of cryptic, but it's fact. It's the reality of life. Okay, it becomes due and payable when the borrower dies. Or if they sell the home. So if you do a reverse mortgage and you on a home and you sell it, you have to pay that whatever you took a reverse mortgage out for. You have to pay that back. Okay. Most of the time, it's elderly homeowners who don't want to go into assisted living. They want to stay in their home, and they want to stay in their home longer, and they want to actually have cash flow each month to help out. Now, I want to share with you this here. I put together some stuff here. Federal regulations require lenders to structure the transaction so the loan amount doesn't exceed the home's value, and the borrower or borrowers, if you have a husband and wife, two partners, doesn't matter. If there's two borrowers, okay, their estate won't be held responsible for paying the difference. Okay, and that's if the loan balance if by accident becomes larger than the home's value. Okay. The only way I can think that this would happen is if the home values go down a lot more and you become underwater, like a regular mortgage. So here are some ways that you can get this. I mentioned it a little bit earlier, but let's go ahead and dive into this now. When you take out a reverse mortgage, you can choose to receive the proceeds in one of 6 ways, and we're going to breeze through these. Okay, a lump sum, you get it all at once, and then you just have it. This is, by the way, the only option that comes with a fixed interest rate. Something to think about. Number 2, equal monthly payments, all right, like an annuity. You just have it come every month depending on what you agreed upon. Number 3, term payments, okay? This could be, for example, you take out a reverse mortgage for 10 years, okay? It's a term payment, like a regular mortgage. Line of credit. The money is available as needed. Number 5, equal monthly payments plus a line of credit. You don't really see that often. When I was in mortgages, we didn't do that often. However, that is an option, okay? And number 6, term payments plus a line of credit. So on number 6 option, all right, term payments plus a line of credit, it's the lender gives the borrower equal monthly payments for a set period of time. Let's just say 10 years, okay? It's really up to the borrower. If the borrower needs more money during or after that term, they can access additional funds. Now, I put together some pros and cons of a reverse mortgage, okay? One is a reverse mortgage allows you to keep living in your home as long as you need to, as long as you keep up with property taxes, maintenance, homeowners insurance. You got to have insurance. But you don't have to move into a nursing home or assisted living or anything like that, okay? And number 2, it gets you the cash that you need. Now, many times family members who are hoping to get that property inherited to them, they will push back on a reverse mortgage. It's just fact. Ultimately, it's up to the person who needs the money the most, okay? Now, a few of the cons of a reverse mortgage is, one, you're using the equity in your home. And so you're tapping into what some people call an asset, right? You have equity built up. Let's say you have a $200,000 house and it's paid off. Well, you would have that amount to actually, tap into. And so some people aren't a fan of using their equity. Number 2, if you have someone living with you and they're not a borrower, okay? So if you have someone living with you and you pass away, you, the borrower, they won't have the right to remain in the home, okay? And number 3, you can outlive the mortgage proceeds and max out your loan. So if you live longer than, let's say, the balance, right, the equity that you have, well, then it becomes payable and basically due because you're outliving what you need. So I hope you guys found this episode valuable. Again, visit my website. It's allabouttherealestate.com. Follow me on social media. Hit up those links in the description below. And as always, tell a friend, family member, coworker, anybody. Tell someone, if you found value in the show, tell them about this show and help us spread the word. So I'm Jason Gelios, Michigan Realtor, and I hope you guys have a great week. Thanks everyone for watching this episode of the Ask Jason Gelios show. Be sure to visit the links in the description below to pick up your copy of my real estate book, Think Like a Realtor. It's a little book about buying and selling residential real estate through the eyes of a realtor. It's real world advice, tips, whether you're a new agent in the business or you are a home buyer or even looking to sell a home. This is great advice. So I really appreciate it if you guys visit those links, pick up your copy, and go ahead and share a review, good or bad, if you like it, if you hate it, okay? But get your copy today. Thank you.